Now? Testing. Oh, okay. Now we got sound. Nice. Hey, I missed you. Oh yeah. Oh yeah. Guten Morgen. We'll start in 7.5 minutes. My yard is in full bloom. Masters Week must be coming up soon. My azaleas are on fire. Yeah, it must be this weekend, huh? Next weekend, I should say. Yep, that's Georgia. Yeah, 3 inches of snow. Three inches of snow. That's just when you bring a shovel to the hockey rink. That's all 3 inches does. All right, just a couple more minutes and we'll get going at the top of the hour. Yeah, oh yeah, it's good to be back. It was another great way for me to experience inflation. So Johnny's going to be rocking the ATL. All right, about 90 seconds. All right, let's do one more quick poll. In my point of view, in my perception, was Europe expensive or cheap? To spend a week in Europe was, in my point of view, my perception, were things expensive in Europe or were things cheap in Europe? Is Europe cheap or expensive relative to the United States? All right, I'm going to place down a marker. Boom. All right. Well, we have just started the stream, so if you're here to see Forex.Today, you are in the right place in the YouTube universe. So good to see you. It's been a while. My name is Wayne McDonald. I will be the guide on our journey across the foreign exchange landscape. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So nice to see you. Hello. So I just spent a week in 3 different countries across the European continent. And the question I posed to you, relative to the United States, what was my experience like monetarily? Was Europe, in my perception, because I'm not talking scientifically, I'm just like, as I went through, did I go, ooh, look at that, that was expensive, or woo, look at that, that's amazingly cheap. What was it like to take a family across Europe, go to 3 different countries, which is a great way to kind of sample different exchange rates. And was it cheap or expensive? I found Europe cheap. Isn't that interesting, huh? Isn't that interesting? Now, there was a couple of reasons for it, but like restaurants, for example, you sit down and you have a family, and you crowd around the table and you order food for everybody. Great. And at the end of it, it was, in my humble opinion, much cheaper than sitting down with a family at a restaurant in the United States. But also, in the last 5 years, because of COVID, the standard tip in the United States went from 15% to 20%. And in Europe, they don't ask for a tip. Very often they're like, do you want to pay cash or card? I'm a card. Do you want it in dollars or euros? Dollars. Okay, and then you tap your credit card, they leave. They walk away. There's no tip, there's no nothing. And so when you throw that down, it seemed to me like the United States seemed to be, let's say, 20% more expensive. And then there's no 20% tip. So all of a sudden you're like, dude, we just ate a huge meal, and it was like 35 euro, for a big breakfast for a bunch of people and coffees and this and that. You're like, dude, 35 bucks, 35 euros. But anyways, and then one thing that I kept, and you guys are Forex guys, so you might like this. Oh, I want to go to this one. Look what I got. Does anybody know what that is? It says Bank of England on it, but it's not a British pound. Winston Churchill, got the Queen. But it's not a pound, not a British pound. Or maybe it really is. I don't know. I thought it was a Gibraltar pound. So I went to Gibraltar for a while, where they speak gibberish. Maybe that is just a pound. Did I just get a standard old pound? See, I thought the British, I thought I got this from an ATM. I thought Gibraltar had its own pound, and you can use British pounds in Gibraltar, but you can't use Gibraltar pounds in Britain. But is that it? Does anybody know? Is that just a regular old 5-pound note? Look at the see-through part. I mean, it's got Parliament in there, right? Which countries did I visit? I flew into Portugal and then drove across Andalusia, which is southern Spain, drove into Gibraltar, and then drove all the way back. So anyways, yeah, very cool. So let's get on with it. So I missed you, so it's gone for about a week. Is that just a regular old fiver? Oh, I'm a little disappointed now. I probably have coin. That's a normal fiver. Ah, too bad. Too bad. I was hoping to get Gibraltar pounds, but oh well. Anyways, I got a fiver. All right, so anyways, let's get going. We have lots to kind of do. By the way, tomorrow is non-farm payroll, so I'll be over at FX Street on the FX Street YouTube channel. So please mark that on your calendar. And with that, we're interested in, and it comes to this poll, 42 people have responded to the poll. So let's take a look at the poll. And you say 50% say the Fed's not going to cut in June. That's interesting. So sentiment has changed a little bit since I've been gone, and that's why I wanted to ask. And 40% say, yeah, they are going to cut. So it's a 50-40, and then 11 have no idea. And I'm wondering why the no idea one. Maybe you don't care. Maybe you're a technician only kind of thing, and you're like, it doesn't matter. I'll just trade the price. Or maybe you really have you don't follow any fundamentals, that kind of stuff. Or maybe it's just a capitulation of some sort, but that's interesting. That's quite a bit of people with no idea. Well, maybe we should try to remedy that someday. Today would not be the day. So 50% say no cut, huh? Interesting. Okay. Well, so what goes into this when we talk about non-farm payrolls tomorrow? The headline number, if it's big, means we could be in a wage price spiral up, returning inflation to the forefront and not allowing the Fed to cut. And that would be for those that think June is not on the table. Now, we'll look for that. What I propose is to counter that, we want to look at all the revisions. But before we look at that, let's talk about, what would the Fed want to do? Not sort of economically, but strategically. If they felt they were going to cut this year because they want to normalize interest rates, is it really a cut if if you lower interest rates but you're still restrictive? Then it's more of a normalization, and maybe they feel like they need to do that. Well, then they need to create a schedule. And I said this back in the January presentation, that I thought in the second half of the year, the Fed would want to create, let's not call it a cut, let's call it a reduction. that they would want to reduce interest rates, keep it restrictive, but put the normalization on a schedule so that they don't seem political. Because the personality of the Fed is they want to appear independent. And so if they were going to cut in October, well, then they should cut in June because October's too close. Or they don't cut until after the election, but that only leaves December. But if they felt they need to cut more than that, let's say, well, 2 cuts is 50 basis points. Maybe they want to cut 3 times, 75 basis points. Well, then if you're going to do that, you need to start in June. If you're going to do 50 basis points, it's probably not cool to start that in October. Or September, just too close, right? So they either get on the schedule or they don't. And that may not be driven by what we would say economics, but sort of more like politics, if you will, or political economic strategy. So anyways, Lewis was in vacation in Europe and it was cheap. Yeah, I thought that was quite interesting. So prices are higher in the United States. So inflation is higher here. Because I'm not even talking about the conversion. Now, look, if $1 bought you 2 euros, then of course, then it'd be super cheap, right? But I'm just talking about sitting down at a nice little restaurant, a little cafe, and everybody gets a little sandwich of some sort and a cappuccino and an orange juice. Because we're in southern Spain, so orange juice is like free. They're like olives. But anyways, a fairly hearty breakfast, and you're like, dude, it was, 10 euro, less than 10 euro a head. You're like, dude, yeah, it came across cheap. So anywho, now, before we move on, obviously, I have Trader's Way here. I've been working with Trader's Way for almost 10 years. I think you should check them out, especially with a lot of the tools and platforms that I've built over the last few years. Things like QuantBox or Tradars. Definitely want to look into having an ECN as your platform. If you're worried about being B-booked, then don't be B-booked. Go with Trader's Way. Pretty simple. Your service providers should have a symbiotic relationship with you, right? Oh, thank you, Lucas. All right, so let's start with the stock market. And I have some concerns. Okay, this can develop into a crown pattern. Not that it will, but it could. And what I teach is that you should be able to anticipate where the pattern forms before the pattern forms. It's very often, too late. Once it's formed, it's already formed. Like Traders is really good with this, right? You have a whole section of patterns that are forming. So that's your radar. And you see them coming. And then once they form, then it goes into an active trade, right? And now it's more about risk management and piling on different time frames for that same trade. When we look at, when I look at this and I say, well, are we in a spot for a crown pattern to form? Let's see if I can get my drawing tool to work. Oh, yeah. I would say you would anticipate a pattern like this forming up in here where that red zone is. And now that you see the lower low, let's do that in a different color. Do it in pink. This low is lower than that low. So then in a crown pattern, somewhere in this zone here, you can anticipate some bearishness. And it's more like if it does, ooh la la. Okay, so before you get all jittery about that, you should check the higher time frames. But you could anticipate this move occurring because of that red zone. And now we're up there and you get it. Yeah, you know, it's pretty serious. That's a pretty serious thing. Check a higher time frame. And you're like, uh-huh. Pretty important. Huh? Isn't that amazing? That is the annual M4, the conservative target for the year. There is a chance. There is a chance that that is the high of the year. That's what the tool is suggesting might be the case. So it doesn't predict the future. It's not doing some sort of prediction that that is the top, but it definitely could be. So then you fall back onto the daily. Okay, and that's why I say check the higher time frames first. We kicked off the daily 21, so we're all good for the next high. Okay? We're all good for the next high. Everything's great. Everything's golden, everybody. But depending on non-farm payrolls tomorrow, if it brought the stock market down, like last month was revised up, and this month is a big number, just a double whammy, and the probability of Fed cuts coming soon is diminished. Well, hell's bells. That little head and shoulders on the smaller time frame of only the 4 hour could end up being a significant game changer, increasing the probability of that's the highest high for the entire year. Remember, it's not me saying that it's going to be, but that's what the tool would suggest in that situation. And we could be on our way back to 44.44. Wouldn't that be something? Wouldn't that be something, huh? Okay. Well, if we're at Dow 5,000, let's say, we're above that, but a 10% drop would be a 500-point drop, right? So we're talking about a 20 to 25% drop. Is that right? Is that what's on the table? If we were going to use pivot points to try to figure out and assess the probable damage? What are your thoughts? Any thoughts? Okay. Silver just hit my 2618. Delete. Look at that, huh? It's pretty good accuracy. Yeah. Holy smokes, eh? Charles says, hey, doesn't think that big of a pullback is likely. Well, let's put it this way. We started the rally last year in October when people thought there was going to be six Fed cuts. And then it was 5, then it was 4, then it was 3. Now it's less than 3. What if at the end of what if tomorrow we figure it's like 2, maybe only 1, or maybe even none? So people are thinking 2 cuts, 1 cut, or no cut this year. And Jay Powell's trying to push against that. You might have caught his comments yesterday. But if we're going from 6 cuts, let's say, to 1 or 2, Charles, then the high prices that we have now in the stock market are just incorrect. It's not that the economy is going to crash. It's just the price of assets are inappropriately high. The models are wrong. And so you just readjust the value, right? The price, not even the value, the price. Right? Okay. Okay. No, it's a loss in valuation. So, yeah, where would people probably, let's say, short-term treasuries? The 1 year or 2 year? Okay. Or just keep it in cash? But it seems like money markets would be a place to put that. Hey, Abdul, I'm not following your question. Cool. So anyways, if inflation comes back, and I've said this many times, but maybe I said it in the day trading group, maybe I said it in the swing trading group. You want to own like commodities and commodity assets, things that are real. The realer, the better. And so, things like, silver and gold might be pretty good assets. So we had this coming up, and then I drew this. We watched this for a month, 2 weeks. 2 weeks we had the down. Then we had the pop with the higher inflation, the roll reversal. And then I drew this to show you the change. Okay, the change from this was an upslope, then it was a downslope. Could this be the upslope? This is how you're supposed to be thinking and planning your trades in advance. And then you got the higher high, higher low, 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 higher high. Okay. Very cool, right? And we just ran into the monthly R for gold, resistance. Okay. So let's thread it again, and it's simple price action. Okay. Now, when should you have become a bull on gold? Well, that line is the day QuantBox became a bull on gold. That's measuring like 7 different economic indicators. And on that day, and I even have a triangle here and a vertical line, on that day, fundamental analysis of macroeconomic data would suggest buying gold is a good idea. Before that, it was not a good idea. It was terrible for months and months and months. Buying gold was flat out stupid. And when I was in things like non-farm payrolls, people would want to talk about gold all the time. I'm like, why? I was really flippant about it. Why do you want to talk about gold? Buying gold doesn't make any sense. Why would you buy gold when inflation is falling? We're in a disinflationary period, so why would you want to buy gold? Well, right on this day, everything changed. Then it made sense. Why? Inflation started tiptoeing back into the U.S. economy. And that's when you buy gold, when inflation is starting to rise, not after it's risen. Okay? So anyways, you start to see these little moves here, and then it started to accelerate. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, and then, so what is this? Well, if you're an Elliott waver, maybe it's a 3-wave correction of some sort. I don't know. I'm not really an Elliott wave guy. But I drew all of this so you can see the break of the down if you're really just a bull. As a bull, you need to be able to measure the retracements, when to take profit and get out, and then the breakouts, when to get back in. And I even drew it like, look, maybe it'll break now. Well, it didn't. It took a little more time, and then it broke. Well, you can see that. You can see that. Okay? So what do you do now when there's a breakout to the upside? Buy the dip. And you're like, well, when do I buy the dip? Yes, that is the right question you should be asking. How the heck would I know? That's why you have tools and processes, so you can measure all of that and figure out when is the right time. How about a Fibonacci retracement? How about a pivot point? How to do this? How do you do that? I don't know. Okay? Then what? Well, that's definitely a higher high. That's definitely a higher low. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. So what's going to happen today? I don't know, but what you should be asking is in the next 24 hours. Maybe it's in 2 hours, maybe it's in 20 minutes, maybe it's 18 hours from now. But by the time we meet again, if you're a bull, you're probably going to get long again. Now, you might lose money, so use a stop, manage your risk. But if you're a trend trader here, you're looking to buy a dip. There's no debate about that. It's just, will you get the right price and the right time? Are you going to kick it off the daily pivots? Are you going to kick it off the moving average? Okay. So here's the moving average. Okay, but what worked? Let's go back here. This was the buy zone, and that worked. This is the buy zone, and that worked. This is the buy zone, that worked. Here's the buy zone. That worked for 2 days straight, and then it pulled back. There's the buy zone. There's the buy zone. And so what you should be thinking most likely, if you're a bull, I'm not telling you should be, somewhere in here is probably where you're going to get long if you're a bull, and your target is probably somewhere up there, right? Sam says, is my mouse working today? Actually, I don't know if you just saw the message, but I just got a message that there's only 1% left on my mouse. So, yeah, I guess you saw that. Interesting. Okay. So anyway, so is that what's going on here? You think there's going to be a move like this between now and tomorrow? Okay. Thank you, Charlie. Cool. A quick look at crude oil. I did this for you in February, And our target was 84 to 85. We are now definitely into that target. And this was created by, right, you can see a target going as high as 90, I think it was. Here it is. Can you see? I drew that back in February. This was created by traders, one of the first trade plans by traders. Okay? Interesting. So anyways, I moved from 68 to 69, maybe 70, all the way to 85. Cool. Neato. Right on. Coolio. Bitcoin, a week ago I trapped it in this little zone and it looks like it hasn't moved out. Is that it? Really? 66, huh? Cool. Cool. All right. It doesn't look very bullish, so we're trapped in here. In fact, I'd almost pull this down a little bit, huh? It fell even further than I thought. Interesting. So got to be careful there. Let's take a look at the... I'm worried about my mouse dying. So I might have to end this one early, and I'll just see you tomorrow. Let's take a look at the longer point of view. Swiss franc, okay, cutting interest rates to make sure that they have a weak currency. So I'm just assuming you've been selling the hell out of the Swiss franc while I was gone. It makes sense. We've talked about it. I pushed it on you. So I'm sure you've been paying a lot of attention. Okay, they're the first major central bank in the world to cut interest rates. So I'm sure you're on that. USD is super weak. Yen is still super weak. Okay, now we had that big move this way, and then now we're trying to come back around. Okay, but yen, I think the last time I looked, we were at 151 and change on our way back to 152. That's a big, scary number. We'll have to watch that a lot next week. Pound has done nothing. Kiwi, maybe a breach to the downside. We got to be careful. Okay. Australia seems to be the last in line to cut interest rates. You know that if you've gone through and read the reports by the Reserve Bank of Australia. I do that on Tuesdays, by the way. If you want to actually read the reports so that you actually understand, instead of relying on quote-unquote experts on TV, if you'd rather be the expert, you should join Investor Bootcamp. We read these together. I do the homework with you. And so we know Australia is now likely to be one of the last central banks to cut. Cool. So it's maintaining some strength. Switzerland is already cutting. And look at the weakness. You should know that. Your Aussie Swissies probably doing really good. Well, frankly, anything Swissy. Euro Swissy, pound Swissy. Now, the reason Switzerland is cutting is they want to support the euro. And euro's going up. Okay? So you should be, if you're doing your fundamentals, you should be killing it, crushing it, destroying it. Okay? Where's my euro? No, that's kitty cat. Okay, here's one, right? So you're loving it, I'm sure. Loving it, killing it, crushing it, destroying it. It's all yours. Free money. Okay? Okay, let's go to a smaller time frame. Let's change this to swing trading maybe. So we can go to No, I want swing trading bullish. Okay. And these zones are the zones in which you want to be a buyer. Okay. Now, if you're in my swing trading group, not only have you learned that, you also know that at the beginning of the week is the best time to trade. I spend a lot of time, and so does Coach Ryan. We spend a lot of time on the timing of these setups, not just the price, but the time. Remember, it's the price-time continuum. And if you go back and look at these opportunities, holy schnecker. Beautiful, right? And so maybe sometime in the future, you'll get an up somewhere around in here, depending on if it continues to make a higher high. These types of trades are for people that don't have 1 or 2 or 3 hours a day to trade. You only have 1 or 2 hours a week. Well, then you need to learn how to swing trade. Okay? I'd rather you learn how to swing trade first than scalp. Now, most people learn how to scalp, and they never grasp or even live long enough to learn how to swing. I think you should learn how to swing first and then learn how to scalp. That, right? Dakar says, time with Ryan was great. Yeah, I'm sure. But that makes me happy. So thank you, Dakar, for that feedback. Okay. So going back, here's 1 week. Okay. 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, and now this is the 7th week. And what you should be watching for right now is planning out next week. This week's already done, like, dude. Okay. So you're like, well, I don't know if we were going to do, let's kill that second one. If we were going to do some form of price action, we would want to buy a dip somewhere around here in the next, let's say, 48 hours of trading. So not including the weekend, right? So something like that is what you might expect. And you say, well, we're looking at a trend to the upside. It could go a little higher first, and that would pull this buy zone up a little higher, right? So if we can reconstruct this, it would probably look more like this. This goes up a little higher, and therefore this green zone comes up a little higher. So let me redo the green zone, and that brings the green zone somewhere around here, because you know the math. So you're like, that's why the green zone moves up, because you know the math, because I teach you the math. And then, therefore, this could come down, and then maybe Friday or Monday, you get a buying opportunity at that price, and then you go long again. Okay? Okay, Andreas. So you joined Investor Bootcamp? Okay. But you're having problems watching the videos? I'll give you his email, though. Okay, so anyways, that's how you'd put that together. Yet another great trade. But notice this is all based on the central bank cutting interest rates. Basic 101 when it comes to fundamentals. And again, what I said is there's a relationship with Europe. Yeah, Andreas, you go into the download section and you download the installer, or the files for that matter. Let's see, I haven't logged in a long time. Let's see. So where it says chart toolkit for MT4, MT5, over 200 templates, profiles, indicators, and EAs installed on your MetaTrader platform, that would be it. The basic toolkit installer, all the separate files, and then the complete toolkit installer and all the separate files. There's multiple pages. Yeah. Okay. There you go. Couldn't be easier. All right. So, oh yeah, I want to talk about this. So, I'm sure you'll figure it out, Andreas. Right? You change your templates. There's probably also 458,362 videos on YouTube that would also help. You got it, man. You got it. Yeah, you got it. You got this, man. You got this. Abdul, I don't know what you're talking about. Abdul has a question about traders. Okay, hang on. Let me pull up traders. Traders.co. Oops, didn't mean to do that. All right, well, that's fine. All right. If I upgrade traders, I saw another package for 19. You paid for 16. I don't understand what you're saying. There's this one, or there's this one. And it's called the online subscription with daily email. So you don't need this one. You get that one. No, there's no coupons. Yeah, they're ridiculously cheap straight out of the box. Cool. All right. Oh, yeah. So I want to make this point, and then I think I should go before my mouse dies. Okay. You have a country like Switzerland. And then all around Switzerland, you have Europe. And guess what? Switzerland does a lot of business with Europeans. Okay? Okay, great. So Switzerland makes a lot of money with Europe. When the Swiss franc gets strong compared to euro, so euro could get weak, and that makes the Swiss franc look strong. But that means if the euro's weak, Europeans can't afford to do any business because their currency is falling apart. Or if the Swiss franc gets too strong, it has the same effect where Europe just can't afford a new Rolex watch or Swiss chocolate or skiing in Switzerland versus France. If the Swiss franc is too expensive, Europeans will just choose to ski in France or Innsbruck, for crying out loud. But they're like, no, not Switzerland, because Switzerland just would be too expensive. So what Switzerland is doing now is cutting interest rates to make the Swiss franc weak so that Europeans can do business with them. And that supports the Swiss economy. So that benefits Switzerland to have Europe rich. Okay? It's hard to hide people's money when people don't have money to hide. So they want Europe to be rich. So they cut interest rates and or buy euro. They could just, the Swiss National Bank could just buy euro, which is a form of selling Swiss franc because they exchange it. They sell the Swiss franc to buy the euro, and they cut interest rates so that you have no benefit to put your money in a Swiss bank. Okay, you see? And so when they cut 2 weeks ago, okay, crazy great opportunity. Basic, simple, fundamental 101. In my book, I call it the money magnet. Well, in this case, it's the opposite. They're cutting interest rates and they're repelling money. You know what I'm talking about? Repelling money. Yeah. So that'll be good. So I think we should leave it at that. Okay, I think we'll leave it at that. And I will see you tomorrow at the FX Street YouTube channel for non-farm payrolls live, 240 or something. I have no idea. But it's been many. So I'll see you over there. And I just want to say that I missed you while I was gone. The world is beautiful. And it's interesting when you travel, you can see why GDP is low in a place like Portugal and Spain. Beautiful countries, but sometimes more difficult than necessary. And it's interesting. I drove all the way across Spain and just hundreds of kilometers of no activity. It was really strange. Well, for some reason, after driving for 6 hours and seeing nothing but olive fields, the next guy says, you know what? I want to grow olive trees. Okay. Hours and hours and hours and hours and hours and hours and hours of driving. About every 30 minutes, you come across a gas station. Huh. No McDonald's, no Taco Bell, no Starbucks. Can you imagine Americans driving for 6 hours and not seeing a Starbucks? You're like, what the heck is this? Oy vey. It's interesting, right? Like, it's different. That's all I'm saying is just different. But then they grow so many olives that when you go to a restaurant, they give you olives and you didn't even order them. They're like, just please eat these damn olives, right? So, interesting. So it just seemed like beautiful. Oh, and the other thing is, it was a holiday. It was Easter week, and in places like southern Spain, Holy Week is a very, very, very big deal. And it was interesting where you could drive, and there was and again, all the way across Spain, starting in Portugal, all the way across Spain, and then all the way down to Gibraltar. Like, no traffic. No traffic. Absolutely empty freeways. Empty. Empty. Like, strangely just empty. I'm like, where are all the people? This is really very different. Yeah. And the speed limit's 120 kilometers. And for some reason, you have to drive 85 in the slow lane or 150 in the fast lane, but only if you have a German car. So the fast lane's going too fast. The slow lane is going too slow. I'm like, come on, guys. Can we just like even this out? But it was funny, like, whoom, there goes an Audi. Whoom, there goes a Mercedes. Whoom, there goes a Porsche. And then, ugh. And I rented a Mercedes C-Class. And I get to the rental company, and they're like, yeah, there's a problem. I'm like, yeah, bait and switch. I knew it was coming. Yeah, we don't have a Mercedes. I'm like, cool, just a Beamer's fine. Yeah, well, we have a nice French car. And I'm like, no. And they're like, oh, it's the same. I'm like, oh, this French car is the same as a German car. Really? That's like saying French beer is the same as German beer? I'm like, I'm struggling, but I'll be open-minded, but I don't know. And so you get there and you're like, well, it's got leather seats. Oh my God. Not a German car. It was just so funny. I think they forgot to put a few hundred horsepower in there. I couldn't keep up with the German cars on the freeway. It was so funny. And when you're going over the hills, you're like, it's struggling. There was a couple of times I put my foot flat to the floor, and it would scream and yell, but not do anything. Like, so just I don't know. My feedback: French cars are not the same as a German car, even if you put leather seats on it, right? So anyways, I mean, and it's a brand new car, right? We're in the absolute middle of nowhere, Spain. We actually got off the main freeway and then got on the little one and then got on the smaller one. We're in back roads country, and it's raining hard, and we're going around the corners in the mountains. And all of a sudden, in this brand new French car, the full computer just goes out on me. And all of a sudden, it's like, bing, you don't have ABS brakes. Bing, you don't have power steering. Bing, like, and all of a sudden, like, and it's like, all the cameras on the car have turned off. And I'm like, oh my God. And I'm like, this is a brand new French car in the most dangerous situation. And as far from humanity as you possibly could get, this brand new car just falls apart. And it was so funny. I'm like, oh my God. So I'm driving through the mountains, through the rain, no power steering, no power brakes. All the computer PCM is turned off. And we get going, and I drive for about an hour, and I miss a turn. So, because the GPS sucks. So anyway, I go to make a U-turn, and I kind of pull into a little thing and back out. All of a sudden, bing, the computer came back. I'm like, oh, fixed it. But yeah, I had stopped at a gas station and turned it all off and turned it back on. It didn't fix it. And all of a sudden, it worked again. I'm like, dude, not a German car. But anyways. Right? Adam's like, yeah, well, Adam, I rented it 6 months in advance. Right? But anyways, so it was just funny. But, as an economist, though, like, I drove my family nuts, of course, because I like to stop everywhere. I want to stop at the little town. I want to stop at every little gas station. And I want to, like, what are the prices here and what, and all that kind of stuff. And what do people do? Anyways, it was just strange to be on a very busy holiday weekend and there's just no cars. No cars. The freeway was empty, like literally. So you'd get to a big city and there'd be some traffic, of course. But you could drive for 3 hours on a Spanish highway doing 130 clicks. And by the way, as soon as this French car hit about 125 to 130 clicks, it's drifting all over the road. The back window is whistling. Right? And it's swaying like you're in a boat. I'm like, dude, the suspension's so loose. Definitely not a German car. But it was just funny. But as an economist, there's just nothing. And I'm looking at what they're growing and is the land being productive and stuff like that. And by and large, no. By and large, no, it didn't seem very productive. In parts, they would grow grapes. Okay, great. In some parts, they would grow olives. In some parts, they would grow olives. Okay. Oranges. But it just, the towns were desperately poor and empty. The gas stations were okay, but there was no reason to stop and stay and spend money. And like I said, no fast food, no Starbucks. Now, I'm not saying that's a bad thing. I'm just saying there was a stark difference where, the United States is, wherever you stop, there's 7,000 things to spend money on. And it doesn't matter, like every exit, even if there's no town in America, every exit has 7 or 8 choices of fast food, right? And you could just literally go hours crossing Spain and finding very, very little opportunity to spend money. There just wasn't. So it was quite stark contrast. So it was, and that's why you travel. So again, I'm not judging, I'm observing, and it was quite different. So if you can imagine driving from Atlanta to, let's say, Orlando, what is that, about a 10, 12-hour drive? There would be a million opportunities to spend money. In that span of driving across Spain, in particular southern Spain, you would have a few hundred. I mean, I'm adding up all the gas stations, all the restaurants, and all that. You'd have a few hundred, not millions, right? Or tens of thousands, let's say. So it was interesting. Yeah. So, it was just, but the roads were beautiful. Yeah, the roads were beautiful. So it was a comfortable drive. So it made me think of Darko, driving from York in the UK to Croatia. Like, oh my God, that would actually be a beautiful drive if you took your time. So, anywho, I'll let you be. Thank you for staying. I missed you. I'll see you tomorrow. Yeah, there you go, Darko. Yeah. I'll pull that up and then and I'll see you guys later. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you soon, I'm sure. Cheers.